Hello, friends. How are you? Hope you are doing good. So, we have been seeing different subjects, and now I'm going to take a detailed session on break-even analysis. Watch with me carefully. So, I'll be talking on the critical aspects of the break-even point and how to improve your profitability. My focus will be only on how to improve your profitability, how to stay in the market like that. So watch with me carefully. I think previous sessions also has blessed you. I believe that to a great extent, previous sessions on different topics have blessed you greatly. I believe that. So with that hope, I'm then again taking on break-even point. Tell your friends to see the videos carefully and be blessed. Okay. And subscribe to my channel, SBC Academy. So, welcome to SBC Academy. Let us start. First, start with the this session break-even analysis, or we call it as cost to volume profit relationship analysis. Okay, CVP, cost to volume profit analysis, or break-even analysis. Both are used interchangeably, though there's a minor difference is there. But our focus is not on that. Our focus is on how to analyze the cost and the how to find out the break-even point, how to improve the profitability and other things. Okay, so first to start with, we have to analyze the cost. So that's very important because it is the classification of cost is very important for all decisions because we will have to go to arrive at one more terminology by name contribution. So the contribution will play a major part in your profit planning, in your selecting the product, in mixing the product, in selecting a particular machinery, like that. So many benefits are there. So that's why I have taken this. This class is really devoted on the classification of cost because the contribution depends on the classification of cost. Okay, so I'll just explain this. Then again, I'll take a complete session on contribution separately, and how you can use the contribution for your own advantage. Like that, I'll take that so that you will not stumble in taking a decision. Suppose two, three products are there. Which product I have to focus? Okay, I was tell last time the trainers came and they told me the one fellow is having a sweet shop and he is having the three things are there. One is sweet, one is cool drinks, other is the other savory items. So which he has to focus. Though he is focusing on, though the turnover, so the crowd will be crowding on a particular product, but it may not be profitable. So he will be focusing on his energy on those products where the demand is, where people are coming and going, buying and like, by the time you come the next day, last day, to put a plus and minus, then nothing will be left in the hands of the entrepreneur. So you have to focus on those products which is earned high profitability. Okay, so this contribution and things depends on will a deciding factor for choosing all the things. I will deal in the next sessions. Till such time, the first we have to have the contribution, you have to classify the assets cost correctly. Okay. So first is the profit. The main aim of running a unit is or running a business is to make a profit only. Profit. So you have to, otherwise our main aim is to maximize the profit. So improve the profit. You earn the profit. We must have the profit. Otherwise, nobody will run the business because it's of no use if you're not incurring losses. Losses will come in the initial period. That's okay, no doubt. Teething problem will be there. You'll be incurring some losses. But thing is, that is not the aim. Ultimately, you have to settle down. You have to may start earning a profit. All of a sudden, profit will not come in the first year itself. And second year also, you have some teething problems. You have marketing problem. Other things are there. But as it goes, as you settle down, it will start fetching profit. Okay. So the profit difference. So what is the profit? Profit difference between sales realization and cost. Okay, cost already you are incurring costs. How many costs you are incurring? Sales realization, the sales price. Sales, what the total sales. So what is profit is sales minus cost equal to profit. Okay. The profit, here you have to understand, profit does not necessarily increase or decrease directly in proportion to the volume of sales. Because just the sales is increasing, profit will not increase. Well, so just sales is coming down doesn't mean that proportionally the profit also will not decrease. So it is depends on. So profit is not direct, though it increases decreases, but it is not directly change in proportion to the sales volume of sales. So see, profit does not necessarily increase because sales have gone up. So profit does not necessarily decrease because sales has come down. There are other, because there are some costs which are related to output. There are some costs which are not related to production or sales. You take it as sales. So there are some costs. So that is why profit does not necessarily increase or decrease directly in proportion to the volume of sales. Because sales have increased, the profit will increase, not necessarily, not necessary. Because there are some costs which vary with the product output. There are certain costs which do not vary with the production or sales. Even if you don't run the machine, even if you don't make any sales, still you have to pay for your rent. Am I right? So some costs, so profit does not come, profit does not, but the profit does not necessarily because sales is not there. There's no loss. You cannot say, because there are certain things which you have to incur. Whether you are running the product, running the machine, when having the sales, nothing. It is even if you don't have sales, there are certain costs which have to be made. So there are some costs. Reason is some costs vary with the output. That is called variable cost. It's called a variable cost. There are certain costs which do not which vary with the output. It is called fixed cost. Fixed cost. Okay. So there are two types of costs in any organization. Being a small business, you must know how to classify the cost into two type of categories. One is variable cost and fixed cost. Okay. So what I told you, that some costs vary with the output, variable cost. Some costs do not vary with the output, fixed cost. Simple test. So you can say, what is variable cost then? Variable cost one is one that varies in relation to the output. Out sales. You can take yourself to sales. Suppose retailer, the sales. So, for example, raw materials, stores and spares consumed. These are directly related to the product. That is the product. So if you want to increase the product, you have to increase this cost. This variable cost will increase. Suppose you want to increase, suppose you are making a jute bag, or you want to make a jute bag. Suppose I want to make 10,000. Raw materials will, to that extent, you have to buy raw materials. Suppose I want to make 20,000 bags, you have to increase the raw material cost, because this variable cost is changing in relation to proportionally to the volume of production or output. Okay. So this is related to is one which relates to output. So production. So if you want to increase the production, this variable cost also will, because it will go hand in hand. This is not will separate. It will go hand in hand. Variable cost will go hand in hand. You should decide whether it is a variable cost or fixed cost, because that will decide the amount of contribution. Contribution is the greatest thing in this whole of chapter. I will talk to them later on, because very important. So you should forget about the word terminally profit. You should think about only contribution. You should think about only contribution, because I'll tell later on. Then I will give an introduction about contribution. But next session I will deal exhaustively with the contribution and how contribution is used to whether what the decision making contribution is the only factor, deciding factor. Profit planning contribution is a must. So what is contribution? I'll just tell in the later the course of this video. So fixed costs do not vary with the output or sales. Okay. For example, rent, not truly fixed, rent on building. Suppose you are taking a machinery on lease. You are taking a machine on lease, you have to pay the rents. Rents, whether you have a machine, you are running the machine or not, monthly you have to pay the rent. Monthly you have to pay the rent fixed. Fixed means in the sense it is not related to output. Whether you run the business or not, whether you run suppose you are taking a building on lease for 11 months or 1 year. 1 year. So whether you run the machine or not, whether you are incurring a loss or not, whether you are making a sales or not, you have to pay the rent to the owner correct exactly after every month. Okay. Fixed cost. So this is inevitable. You can't avoid it. You can't avoid it. So there are two types of cost that I have already told you: variable cost, fixed cost. But truly fixed cost is not fixed. You must try to understand. Fixed cost means it is not forever. It is not fixed. Forever it is not fixed because it is fixed with reference to the period. You should understand. That is why it is called period cost. It is related fixed with regard to the period. After the expiry of the period, it may change, but it is not related to output or production. It's a simple test. You cannot say, sir, but then it doesn't mean it will not vary. It will vary, but it will vary once the period is over. Well, for example, a building, you're taking the building on lease. You will pay the rent. Okay. So 1 year you're taking the lease agreement. So 1 year you have to pay the rent. 1 year the rent is fixed. 1 year rent is fixed. After 1 year, you may raise it. You may raise the rent. That time it will vary, but it is not related to the output. It's not related to the output. Try to find a clear distinction between those two: variable cost, fixed cost. Variable cost is one which varies in proportion to the output. Fixed cost will not change in relation to the output, but it with regard to the period only it will change. Okay, with regard to the period. Fixed cost based on the period. Suppose depreciation, your depreciation for 1 year you are charging fixed cost. Next year the rate of depreciation changes, it changes. That's all. Simple. There's nothing there's nothing big thing about it. But being a small business, you people should know how to classify, because you should not make mistake in arriving at the contribution. The contribution I will tell later on. In the same video, in the same session also, I'll touch on the contribution. But next session only, I will deal very exhaustively. Okay, it's very important. So, being a businessman, you should know how to classify your cost. Sir, I do not know, sir, I'm not MCOM, I'm not BCom, I'm not MBA. Don't say this. Having taken up business, you must know, you must learn it. That's why I'm just teaching so much on this. That's why I'm taking a exclusively class on this cost business. Okay. So now there are two things are there. So the period cost, rental building. So it is fixed cost. Now you know what is variable cost, what is fixed cost. Okay. So now I have listed out some cost for you. Let us see whether it is variable cost or fixed cost. Okay. So now I'm just saying this. Raw material. So what is raw material? Related output, BC. Consumable stores, BC. Power fuel, related output only, na? VC. Repairs and maintenance, AMC. It is not related output. So it is called fixed cost. Okay. Fixed cost. Now, wages, salaries, you have to pay. Fixed. It is not related to output directly. So, fixed cost. Selling expenses, variable cost. Because selling commission, selling expenses based on the product you are selling. If you sell more, there will be more selling expenses. If it doesn't sell, you will not be paid any expenses. Okay. So this is called variable cost. Interest on working capital. Interest on working capital, you are just availing a loan from the bank. You are having a loan from the bank. You want to buy the raw material. You have been sanctioned a limit of 5 lakhs. You want to purchase a raw material for 2 lakhs. You issue a check in favor of your supplier. 2 lakhs was debited in your account. Okay. Then you got the material. You are selling it. Then again, after getting the cash from the customer, you just remit to the bank. Then interest comes down. Interest comes down because from 2 lakhs to 0. So interest will run only for 15 days, means 15 days only. You are available to 2 lakhs for 15 days. 15 days only interest will run. It changes with regard to the activity. So it is called variable cost. Rent, insurance, fixed cost. The only change in this. Depreciation, fixed cost. Admin, fixed cost. Then interest on term loan, it is fixed. EMI is fixed. You want to buy, suppose you are taking a loan for building a factory. You purchase a loan, you purchase a loan for building your factory. It is term loan fixed. Whether you run the machine or not, whether you earn the profit or not, whether cash comes or not, whether you're selling it or not. You have to pay the EMI. You have to pay the installments. Fix it. So now you got the point? Fix it. So in this case, 5 items are there. 5 items are variable. 5 items are variable. 1, 2, 3, I think 4, 5. So 5 items are variable. Then all other items are fixed cost. Now can you classify it now? Is it easy for you? You can classify it very easily. Being a small business, very easy. Being a small business, very easy. Some of the mills, government mills I have handled. I am not able to classify at all, which is whether it is variable or fixed cost, because so much of confusion, because the terminology, wordings, the way they written the name of the account, I do not understand. But is a variable cost or fixed cost? Then I looked at the company, suppose big company, textile mills. I analyze the balance sheet. I want to find out the contribution. So I start analyzing it. I do not certain things I do not understand. Whether it is variable or not, I know, because being a small business, you can easily understand. You know which is variable, which is not variable, which is fixed, which is not variable. You can easily, because classification you should make correctly. Because once you make a wrong classification, everything will go wrong. Your decision will go wrong. Your decision will go wrong. That's why I'm telling you. Okay. So this is called variable cost, fixed cost. Now you understood this. What is fixed variable cost? What is fixed cost? Okay, fixed cost, though it doesn't mean it will not change, it will change, but it is fixed with regard to the period. So that is called, it is called period cost. Okay, like lease, I'm telling you, take the rent on lease. Once the lease agreement 1 year is over, it may change. The owner may change their rent. Then it's okay. But it is not related to the output. Whether you run the machinery or not, whether you run the product or not, whether you're selling it or not, whether you're taking the machine or running the machine, nothing is bothered. You have to pay the commitment, fixed cost. That is why it's fixed. Commitment is fixed. Okay, don't say that it will never change. Commitment is fixed. You have to pay it. If you don't run the machine, if you don't produce, you are not buying any materials. So it is different. If you are not running the machine, if you are not producing the materials, you need not know why you should buy materials. But you are not running the machine. But fixed cost, you have to pay. Right? You got to understand. Now, there is one more important concept. These two are very important, because break-even point also, this will come. Contribution analysis also, it will come. So please understand, very important point. So don't ever say, I am not a commerce graduate. Don't say it is not beyond, it is beyond my comprehension. Don't say like that. Try to understand and you will be successful. Okay. Now contribution. Contribution. What is contribution? Contribution. What's understand what is my contribution? Say I have contributed to 10,000 to building fund. Let us say. So contribution. So contribution is normal terminology only. It's not a big thing. Contribution means you are contributing something. Okay. So your child is coming. My school is asking for a building fund. I have contributed 10,000 to the building fund. Contribution. Okay, fine. Same thing. Same thing here only. There's nothing wrong with that. Same meaning. So what is contribution? Means sales minus variable cost. So variable cost you now know. Variable cost you are known. Sales you are known. Okay, total sales. So sales minus variable cost equal to contribution. Sales minus variable cost is contribution. So what is missing here? Sales. There are two type of costs I told you, no? Variable cost, fixed cost. So sales minus variable cost over. So you are taking the variable cost out from sales. What is left out? What is left out? Fixed cost plus profit. So contribution is equal to fixed cost plus profit. Why it is contributing? Because why it is called contribution? It contributes towards recovery of fixed cost first. It contributes towards recovery of fixed cost first. Then it contributes to profit. Okay, the two things are very important. First, it contributes. So sales minus variable cost. Either you can completely take the entire sales and the entire variable cost you can arrive, or you can arrive per unit. Per unit you want total numbers, total say divided by number of units sold per unit sale price. Okay. Let us in this case per unit sales price is 60, 100. Suppose say you are making jam bottles. You are making jam. You are in a rural industry. You are making jams. So one bottle is equal to 100 rupees. For producing one bottle of jam, you are spending 60 rupees. Okay. What is left out is 40. This is called contribution. This contribution will go towards recovery of fixed cost first, then it goes towards recovery of profit. That is called it contributes. It contributes towards recovery of fixed cost. Then it contributes to profit. So the contribution is very important. This will decide the factor. You should not henceforth think in terms of profit. You should think in terms of contribution. Why I'm saying is fixed cost can be managed. Your efficiency lies in this contribution only. Your efficiency, I will tell detail. Here also I'm just telling it. Your efficiency lies in the higher contribution. If you have higher contribution, well and good. If you have lower contribution, risky. Some of the business people, when I went for the training, they see they are not able to sales. He is not even covering variable cost. Here, sir, they are running it is sales is 100 rupees. Let us say he is making a jam bottle. So one bottle costs 100 rupees. Variable cost 120. So here itself we get incurring loss 20 rupees. Even core activity, he is sending in 20 rupees loss. Then again, he has to meet the fixed cost also. Rent he has to pay. Let us say rent he has to pay another 60 rupees, 80 rupees loss. He was there. Someone trainee was telling. I told them, don't get disheartened. Don't be discouraged. Don't be worried. Initially, sometimes some business people I've seen that they are not able to recover the cost of production. This variable cost is also called marginal cost. There's no difference. Marginal cost, variable cost, one and the same. Some of the entrepreneurs, when you start a business, when you contribution, the sales price will not even cover the variable cost. One entrepreneur was crying to me, sir, I'm not able to even cover the variable cost. I told him, just make your operational efficiency still more geared up. Try to manage your materials and try to have a wonderful marketing. Try to reach other areas, strengthen your marketing, strengthen your outreach, then manage your materials properly. In the due course, when you start producing more and more, the things will change. You will make contribution, positive contribution. Then you will start recover. You will start getting the profit after recovering fixed cost. I'm telling for those entrepreneurs who are having the same, who are sailing in the same boat, who are saying that even my cost is not, my sales price is not covering even the cost of production. Don't worry. Slowly plug out the loopholes, monitor the material management, reach out to the customers, strengthen your marketing, find out which is the cost for this, where you are losing out, which cost in variable cost, which cost you are losing it. Try to curtail, then employ a good machinery and employ good people. Then you will start making positive contribution. Once you make positive contribution, afterwards you will start recovering fixed cost. Then you will start recovering profit. Straight away, this will not come. Most of the common experience for the entrepreneurs is in the beginning, yes, they cannot even cover a variable cost. They cannot even cover cost of production. Don't lose heart. Keep on doing it, refining your operations, strengthen your marketing, and you will have a positive contribution. Then you will start making profit. So this is more important. I will see the next sessions, all arithmetics. So in this case, I'm selling again profit. Okay, it is not mainly based on the volume of sales. It is because certain costs are involved. So what is variable cost? What is fixed cost? What is contribution? Okay, now I will start the next session on contribution. So when you think of profit, contribution is nothing but profitability of the product. Contribution indicates profitability. Profits is different, profitability is different. Even if you have a loss, still the activity is profitable, still contribution is positive, go ahead. So I hope you understood. I will deal the next session properly, and Sorry, I'll explain the contribution in a very detailed manner. Till such time, thank you. Take care. Okay.